We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up USD CHF. We are on the 12-month time frame. Price action last candle to the right-hand side is a bearish red candle. Very small, spike up to the high, so like it's retesting that second last candle, which identified a spike up to the high as well. So it's multiple retests that's happening at those resistance above price second and the third to last candle. So let's take a look at current price. Current price is sitting at 0.88942. So if price pushes up further, we are looking for price to tag that red and green within that area, which will be over to the left-hand side, nearing the numbers of 1.02029. If price action pushes down, it can tag, so we're looking for the lowest red and green. So lowest red and green would be right on the left-hand side. So that's what current price currently is. So we're just going to put an SR line in that area. So we're looking for price to break. So if it does break, then lower to the following level, which we don't have solid bodies, but we do have a wick down towards the 14th or 15th candle. So we're going to go at the bottom of that wick. So that's how far price we are looking for price to drop, unless it drops down further. We'll look at a lower area, which would be, so the support line would be nearing the numbers of 0.69974. So let's take a look at what's going on. Okay, so we can see that the lowest area with price action tagged red and green to the low was here. So we have that first leg, second leg, third leg, fourth leg. So the fourth leg is identified as the second last candle, came back to retest, and then the price pushed down for that third leg. Now we have to wait to see what's going to happen. Now if the price breaks and pushes down, so we're going to go with the red candles being bearish red. So if the market pushes down from that area, then it's going to be drawn out as the market broke, came back to retest for that first, second, third, and market drops down. If it breaks, we'll see that double top, and we'll see what happened in that area, unless we receive the consolidation, market consolidate sideways, or that market may gain that support off those touches that we identified earlier for that first, second, third, fourth retest. I mean, it has a follow-up with a bullish green candle after, unless this candle turns into a bullish green candle and pushes up and creates that double bottom and a retest or a triple bottom. Working our way down to the 6-month time frame. So price action on the 6-month time frame is reading as a bearish red candle spike up to the high. So you're going to see if that market's going to follow through with more bearish candles to drop that market down further, unless it consolidates sideways or work its way back up. So reading from price action, you look and see what's happening. Price action has a long wick up to that top, so it's retesting the midpoint of the second last candle. Second last candle, third last candle has spiked up to the high, lost momentum, and which created the market drop down at price. So it may be having figure out what's going on. So we do know that the market is losing momentum. So if it breaks down further, let's say it's coming from the highs of that resistance. Okay, so let's see how it looks. Market broke, came back to retest. So we do have multiple touches, but looking at it overall, first leg, second leg, third leg, fourth leg. So we have a double top. Price second, third last candle, retest. Price push down with a little bit of second last candle. Now if we receive the break, market's coming from the double top and retest, got the break. What follows up after the break, very important information. Breakout and retest strategy. So breakout and retest strategy is here. The market will break, come back to retest, and we'll see if it pushes down, or it just may consolidate, or it may just identify the break and come back into that motion of back to previous areas of highs. Headed down to the 3-month time frame. So price action on the 3-month time frame is reading as a bearish red candle. Bit of a wick up to the top, bit of a wick up to the bottom, lost momentum towards the bottom, looked like a huge doji candle, which more body than wick. So we're going to see if that market's having issues, drop it down further, so it can still drop down, break the SR line with a bearish red candle, or we may just receive consolidation, or it may be reversed with a bullish green candle. Let's see the patterns being formed. So let's say if this area of supports is respected, we can see that market identify that first overall, second, third, follow up with the bullish green candle, receive the W formation. That means we're looking for the break somewhere here or near the SR line, depends how big it is, and then come back down to retest. Working our way down to the monthly time frame. So price action monthly time frame reading as a bearish red candle, same as the previous time frames, just hanging out at the bottom, near the bottom of that SR line. But if we take that SR line and we go a little bit above, a little bit below the SR line, what did price enter? Price entered the zone. So tag the zone once, retest the zone. Oh, this is like a triple bottom. So it's like a head and shoulders pattern, triple bottom within this area. Primarily one touch, went through. Now the price action is in it. So we're going to see if it's going to break out, consolidate, or break through. Working down to the weekly time frame. So price action on the weekly time frame reading as a bearish red candle. Second last candle is a spike up to the high. So that second last candle is retesting the midpoint line. So let's read it. Market has pushed down with the third last candle. Second last candle came back to retest, and we still have a bit of a push. Now it can be respected for support and then work its way back up. If so, you see that W formation. Now if not, we'll see that market break. So if it breaks, we're primarily looking for price to break out of the third last candle on the weekly time frame to push that market in that direction of the up and down. Daily time frame. So we have the daily time frame, price action, bearish red candle, going with the second last candle, grabbing that wick up to the high, change that color to green. So if the market does break that as we walk down the time frame, we're going to see the market pushes up further. Now if it breaks through the second last candle, price action could be working its way down, which price action did receive the break. So as we walk down the time frames, we'll take a closer look at what pattern is being formed. 4-hour time frame, let's read it. We have, so the market is reading as a, so when we did create those consolidation lines, when the market did break it, it did identify, so it broke into it. So we have a market went into the area, came back to retest for that first, second, third, fourth retest. Market dropped down, finally broke out. So price action is coming from a triple top and a retest. Now we're looking for the market to break, which it did. And this is the retest. Now we're going to see if it's going to push down further, consolidate, or work its way back up. So far as retesting the bottom of that SR line that we created. Walking down to a 3-hour time frame, we still see the break, consolidation. Headed down to the 2, same as well. We have that break, consolidation, price action, bullish green candle. You want to see the breakout of that third last candle, which is that doji cross to the top of the, or towards the bottom. Same as the 1-hour time frame, market broke. Now we have multiple retests, overall consolidation. There's a pattern being formed in that area. So if price action on the 1-hour time frame doesn't break above the second last candle, it will identify as a coming up in green, first, second, third, fourth. I mean that price action will be the retest, and market will push down if it follows with the bearish red candle coming from a double top and retest. But so far we are looking for the engulfment towards at least the price second, third, fourth, fifth, sixth, the last candle of the market. So you look for price to break that area towards the high or the low of the sixth to last candle in the market. Working our way down to the 45-minute time frame. So 45-minute time frame, starting to see that pattern. We see a W. So if it respects, second last candle spike down to a low, just like the previous side with that bearish red candle right here. So if they respect it, you'll see identify as a first, second, third, market pushing up. But it's having issues. Why? Because it's having issues breaking that midpoint. It only tagged it. So we're going to see if it's going to drop down with the bearish red candle unless we receive that bullish green candle. And if so, market creates that double bottom. Very important information. Please study Forex pattern cheat sheet, breakout retest strategy, USD.